Good week, friends. Vladimir here with you, and this is the weekly review for the 21 of November 2011. As you know, this week on Tuesday, the FOMC will meet and will discuss the issues about a debt in US, and that's the thing. Well, from my opinion, the whole market is waiting. As long as the speculation from Europe keeps zigzagging up and down, better news, worse news, better news, worse news. This week, I guess that the traders will be concentrating on USA news. Until it happens, let's take a look on the charts and let's get prepared for some very interesting pairs just about to begin. So first of all, let's discuss about the Euro Kiwi, Euro Aussie. Euro Kiwi, as you can take a look just right here on the weekly chart, reached very stiff area, as you can see. Well, if it continues higher, it has just a little higher, around the 181, or even little higher to 182, as you can see here on the chart. So stiff resistance based to the weekly chart. If we go back to the daily, what can we see? If it does reach these resistances, right? If it does reach these resistances, it's going to follow this divergence here, right? And the RSI is about to reach the very critical area. If we go even lower for 4-hour charts, you can see the prices just ride the Bollinger Band. Well, if they reach this area, get ready for some serious sell. So I am bullish until it reaches at least 180, or the range of the 180, 182. That's the range, and I believe Euro New Zealand is about to stop. Get ready for the sale from this area. About the Euro Aussie, it's going to be also interesting situation. We have on the daily chart, we have a stiff resistance around 136.70, 50.70, that's the range. If we take a look on weekly chart, it's also a resistance, stiff resistance on the weekly chart. How it's going to act around this area? Let's take a look on daily chart. I believe it's going to retest the 134.70, 80 area, and it should continue all the way higher to 136.70 based on the break of RSI and the positive slope of the MACD. I assume it's going to reach this area. So if it retraces and holds the 134.70, just you can buy all the way to 136.50 with a stop loss below the 20 MA of the daily chart. Actually below this low, around 132.50. When it reaches this area, we should look for the sell opportunity. And if we take a look on the 4-hour chart, just imagine how amazing this situation can be. Just take a look. If it does this kind of move, and then continues all the way to the resistance, you are going to have a continuing divergence here. If it does make it up, the RSI also could reach around the 80 area, which will be oversold, extremely oversold situation, and will begin the down move. Down move, which will provide us 100 to 300 pips correction. So I am bullish as long as the 134.70 will hold with stop loss below the daily 20 MA, below the low 32.50, and the target 136.50, 70. And when it reaches this area, based on the 4-hour divergence, I will begin to look for sell opportunities. Let's take a look on the majors a little bit. Euro dollar and pound dollar. Well, from my point of view, the pound dollar is a little more interesting than the euro dollar. Pound dollar, as it looks once again for the beginning of the week, it looks like it's going to have a flag here. We have 158, 60 to 80 range, 60 to 80 range as a stiff resistance. Very stiff resistance. If we watch on the 4-hour chart. That's the flag I'm talking about. What could happen from here? Just a retest of this high. If it happens, watch a possible continuing divergence that might be created on the MACD. If it does happen, look for a possible sell around this area. If it breaks down below this area, we are going lower. Remember, we have the support at 156.80, and if it breaks through this area, we most likely are going all the way lower, and lower will most likely take us to 155.50, and then maybe even to 154. We still have to remember that the weekly chart has a strong long-term trend line. So as long as this line holds, the pound down move is limited. But if this line will be broken, say goodbye to the pound, and who knows, maybe even new lows. But it's still too early. Let's follow how it goes there. About the euro, well, it's a situation I don't really understand. I just think that the euro dollar, as long as it holds below the previous resistance, 136, and of course below the critical range 136.85, just right here, the euro dollar uptrend is limited and it should make the down move. I do believe euro dollar could reach the 133.70 again, or even lower. So if it does create a flag, the same as the pound, if it does create a flag here and breaks below, I become very bearish again for the euro dollar. And based on 4-hour charts, if it makes the move a little higher to the level we just discussed, it might also continue divergence here, and we will be looking for a sell from this area, long-term sell. That's about this pair. Another interesting pair is the euro against the franc. Watch this area. It's 124. If it made the daily close above this area, we are going most likely for the next stiff resistance, 127. And if it breaks 127, we are going to hold the 130. We're going all the way to 131. Based to the news from Swiss bank, they promised to intervene again, as they want to keep the euro-franc rate above the 125. If it happens, we are going to see a bullish trend. As long as it is traded above the 122, I believe euro-franc will do the move. So just to make it sure, when it's daily close, we have a daily close above 124, that's the time to buy with stop loss below 20 MA. You can make the risk and buy right now, just based on fundamental, and if the intervention is about to happen, you are going to have strong down move. Pound Kiwi is the next pair I want to discuss about, and it reminds me the Euro Kiwi and the Euro Australian we already talked about. We have 11 candles move already. We have strong resistances just right here around the 208, 5209. We have one higher around 211, 212, and we have one next one around 214. This up move is limited. RSI is just about to reach critical areas, so it's the time to begin to sell. If each of the next levels that will be reached is just the time to add more. I don't think you should use stop losses here, as this up move is limited. Even on the weekly chart, you can see this up move has stiff resistances area, and that's a Marubozu. A Marubozu, another limited up move, then a retrace. And this retrace will happen and will cause a lot of pips as the correction. Stay tuned for this possible trade very soon. Aussie Kiwi is the next one I want to show, and I already started to attack it just from this area around the 132, and we have a divergence here, so from my point of view it's just a question of time until it happens. Next area it might reach is the 133, 133.50. If you take a look on weekly chart, that's the exact trend line might be reached. From my point of view, this up move is limited, and we have to see a correction for this pair. I would say at least to 129.50, the previous low here, but we should remember we have here still a bullish trend line. So if it goes up, a retrace to the entry area here might be just the final step. If this trend line will be broken based on the divergence, we are going further down all the way to 128, 128.50. So as you can see, many exotic trades, as well, honestly, I do not believe there are very good opportunities on the majors. So enjoy these trades, enjoy these pairs. It's going to be interesting time. Just stay tuned for Tuesday, as Bernanke and Gardner and Obama were going to release their plan to fight the U.S. critical debt. Thank you very much for your time watching this video. Have a beautiful week and successful, and of course, many profits.